A guide to campaign disclosure. Who is covered by the Act? Anyone who has accepted contributions or made expenditures or independent expenditures in excess of $5,000 within a 12-month period in support of or in opposition to a candidate or candidates for public office or a question. If you have received or made expenditures in excess of $5,000 within a 12-month period for electioneering communications or have made independent expenditures in excess of $5,000 within a 12-month period. A contribution is cash, loans, or anything of value received in connection with an election or for political purposes. Goods or services provided to the campaign or purchased on behalf of the campaign must be reported as in-kind contributions. Who is not covered by the Act? Individuals running for federal office are not covered. However, some paperwork may still be required. Corporations, associations, labor unions, or individuals who make political donations strictly from corporate profits, union treasury, or personal income. If an individual, corporation, or labor union solicits funds to support or oppose a candidate or question of public policy, they are covered by the Act. Similarly, any entity other than a natural person that makes expenditures exceeding $5,000 in a 12-month period supporting or opposing a public official or candidate is covered by the Act. At the time of filing, a candidate who files nomination papers in person will receive a notice of obligation to file campaign disclosure reports under the Campaign Finance Act. If the candidate files petitions by mail, or if someone files the papers on behalf of the candidate, the notice of obligation will be sent to the candidate within 2 business days. Forming a committee. The law requires that every political committee have both a chair and a treasurer. The same person may hold both positions and in most instances even be the candidate. No expenditure can be made without the authorization of the chair or treasurer. For this reason, financial transactions of the political committee cannot take place when a vacancy occurs in either office. The treasurer of a political committee is responsible for keeping detailed accounts, records, bills, and receipts that will verify all information shown on official reports. The treasurer is typically responsible for filing a political committee's report. The treasurer of a political committee should advise all campaign workers soliciting funds on behalf of the committee that a detailed report of money collected must be maintained so that accurate reports can be filed. A detailed record of all funds collected by campaign workers must be submitted to the treasurer within 5 days or upon demand. Opening a separate segregate bank account is recommended when forming a political committee. The mixing of campaign funds with any personal funds of officers, members, or associates of political committees is prohibited. All records related to financial activity of a political committee must be preserved for 2 years. Records related to raffles must be preserved for 3 years. Sponsoring entity. A political committee may have a sponsoring entity. A sponsoring entity is any person, group, organization, corporation, or association, except another political committee, contributing at least 33% of total funding of the political committee. A sponsoring entity must be identified by a political committee on its statement of organization. Disclosure in political communication. Any committee that makes an expenditure for any kind of communication directed at voters and mentioning the name of a candidate in the next upcoming election must ensure that the communication clearly identifies the committee as having paid for it. This applies to any committee that pays for any part of advertisement, including its production and distribution. Solicitation of funds. If a campaign solicits funds through ticket sales, literature, broadcast media, the internet, or other forms of political advertisement, the law requires that the following notice appear. A copy of our report filed with the State Board of Elections is or will be available on the board's website or for purchase from the State Board of Elections. A political committee may not solicit or accept contributions or make expenditures on behalf of a candidate without that candidate's written authorization. If the authorization is not given, the political committee must include a statement on all such campaign materials indicating that it is not authorized by the candidate and that the candidate is not responsible for the committee's activities. Fundraising restrictions. Constitutional office holders or candidates, members of the General Assembly or candidates, or a political caucus of the General Assembly, or a political committee on behalf of any of these, may not hold a fundraising function in Sangamon County on any day that the legislature is in session. This ban runs each year from February 1st through the latter of the adjournment dates of either the House of the spring session and during the entire fall veto session. Members of or candidates for the General Assembly whose districts are located entirely within Sangamon County are exempt from this limitation only between June 1st and the first day of the fall veto session. No candidate, public official, state employee, or agent of any political organization may intentionally solicit, accept, or offer contributions on state property. The only exception to this is if it occurs in a portion of the building that has been rented or leased from the state by a private person or entity. Certain state and local government employees are barred from knowingly soliciting or receiving political contributions from a person engaged in business activity over which the employee has regulatory authority. This ban applies to salaried employees of state executive branch, constitutional offices, and employees of chief executive officers of counties, townships, or municipalities. In addition, businesses that have existing contracts or bids on contracts valued at more than $50,000 a year are prohibited from making contributions to public officials or his or her political committee or candidates for the office responsible for awarding the contract. Contribution limits. Notwithstanding the other fundraising restrictions, most political committees face contribution limits that restrict the amount of money they can accept from various sources. These limits are determined by the type of committee receiving the contributions, as well as the source of the contributions. Contribution limits are based on election cycles. For most types of committees, an election cycle equals a calendar year. However, for candidate political committees, election cycles depend on the office being sought by the candidate supported by the committee. Contributions per election cycle for candidate political committees: $6,900 for an individual, $13,700 from a corporation, labor organization, or association, $68,500 from a candidate political committee or political action committee. And there are no limits for a political party committee except during an election cycle in which the candidate seeks nomination at a primary election. During an election cycle in which the candidate seeks nomination at a primary election, a political party committee may contribute $274,200 to a candidate for a statewide office, $171,500 to a candidate for Senate, Supreme, or Appellate Court in Cook County, or county-wide offices in Cook County, $102,900 to a candidate for House, Supreme, or Appellate Court outside of Cook County, county-wide offices outside of Cook County, or local candidates within Cook County, or $68,500 to any other candidate. Self-funding candidates. A candidate or public official or their immediate family members, such as their spouse, parent, or child, can make unlimited contributions to that public official or candidate's political committee. However, if these contributions total more than $100,000 or $250,000 for statewide constitutional offices, during the 12 months prior to an election, the candidate is considered a self-funding candidate and must file the appropriate paperwork. If an individual or independent expenditure committee makes independent expenditures supporting or opposing a particular candidate during an election cycle that total more than $250,000 for statewide offices or $100,000 for all of their offices, the individual of the Independent Expenditure Committee must file a written disclosure with the State Board of Elections within 2 business days. Contribution limits per election cycle. Political party committees. $13,700 from an individual, $27,400 from a corporation, labor organization, or association, $68,500 from a political action committee. No transfers are permitted between legislative caucus committees. No limits or contributions from other political party committees or candidate political committees. And no limits on transfers between state political party committees and federal political party committees. Contributions per election cycle for political action committees. $13,700 for individuals, $27,400 for corporations, labor organizations, associations, or political party committees, $68,500 for political action committees or candidate political committees. Contributions to a political action committee from a ballot initiative committee or independent expenditure committee are prohibited at any time. Ballot initiative committee. Unlimited from any source at any time. Ballot initiative committees are unable to make contributions to any other type of political committee. Independent expenditure committee. Unlimited from any source at any time. Independent expenditure committees are unable to make direct contributions to candidates or committees, with the exception of other independent expenditure committees or ballot initiative committees. Independent expenditure committees are also unable to make coordinated expenditures. Important. A committee that receives a contribution in excess of the allowable limit must return the excess portion to the original contributor or donate a like amount to charity. If this is done within 30 days of the board sending notice to the committee about the excess contribution, no contribution limit violation will have occurred. Failure to dispose of the excess amount results in a contribution limit violation, requiring the committee to escheat the excess portion of the general revenue fund and subjecting the committee to a civil penalty of up to 150% of the excess contribution amount. Filing the Statement of Organization, which is the D1. Once it has been determined that your campaign has exceeded $5,000 in either receipts or expenditures, it must file a Statement of Organization, Form D1, with the State Board of Elections within 10 business days. If a committee exceeds the above threshold within the 30 days prior to an election, the Statement of Organization must be filed within 2 business days. Failure to file or late filing of a Statement of Organization will result in the committee being assessed a civil penalty by the board. A Statement of Organization may be filed in person, by fax, or by email. The Statement of Organization, which is the Form D1, consists of 11 sections that require information concerning the structure and purpose of a political committee. Section 1. New committee, reactivating, amendment. Mark the appropriate box here depending on whether you are filing for the first time, activating a previously finalized committee, or amending the information of a currently active committee. Section 2. Date the committee was created. A political committee's date of creation is the date the $5,000 threshold is exceeded. Section 3. Funds available as of creation date. This amount cannot exceed $5,000. The requirements to disclose contributions and committee expenses take effect once the committee has accepted contributions or made expenditures in excess of $5,000. The contribution or expenditure that places the committee over the threshold is the first item reported. Section 4. Committee designation. Are you a candidate, political party, political action, independent expenditure, or ballot initiative committee? Candidate. A candidate or any other person or group designated by a candidate to accept contributions or make expenditures on behalf of the candidate would qualify as a candidate political committee. Party. A state or county central committee of a political party, a committee formed by a ward or township committeeman of a political party, or a legislative caucus committee formed by members of the Illinois Senate or House would qualify as a political party committee. Political action. A person or group other than a candidate party, candidate committee, or party committee that makes contributions, expenditures, or electioneering communications in excess of $5,000 supporting or opposing candidates for public office will qualify as a political action committee. Ballot initiative. A person or group supporting or opposing a question of public policy to be submitted to voters will qualify as a ballot initiative committee. Section 5. Areas of activity, scope, and party affiliation. If applicable, the counties or districts in which the committee will be operating should be listed here. If the committee intends to operate statewide, that can be listed here as well. If the committee has a political party affiliation, it can be disclosed in this section. In some cases, nonpartisan may also be an appropriate listing under party affiliation. Any sponsoring entities for the committee should also be disclosed in this section. Purpose of the committee. A statement should be made indicating the intent of the political committee. This statement may be simple or detailed. For example, a candidate-related committee may use a basic statement such as, to support the candidacy of the candidate, or a more general statement such as, to support candidates who share the ideology of our organization. Candidates supporting or opposing. For a single candidate-related political committee, simply list the candidate's information here. If the political committee has been created to support or oppose a slate of candidates, it is necessary to list each candidate that the committee will be supporting or opposing. If more space is needed to do this, an additional sheet may be attached. If the political committee has been created as a PAC, which is a political action committee, its support of specific candidates can change periodically. It is recommended that such committees simply insert a statement to the effect to be determined by the political committee. Required committee officers. The law requires that every political committee have a chair and a treasurer. Although the same person can hold both positions, in most cases a candidate may hold both positions, although judicial candidates are prohibited from holding an office in a political organization. Other custodians of the committee. The staff of the Campaign Disclosure Division may want to communicate with the person who has access to the committee's financial documents. The treasurer of the committee is the primary contact, but committees may utilize other resources. If an individual other than the treasurer has access to financial records, provide that information here in Section 9. Financial institution. All political committees must indicate where their funds will be maintained. This will include all financial institutions or repositories where funds may be invested. If any information in this section changes, complete the entire section including any previously reported institutions that are still being used by the committee. Disposition of residual funds. A political committee may file a final report if it is no longer intending to raise or expend funds for political purposes. The committee must have a zero ending cash balance and must have disposed of all of its assets in order to file a final report. After the committee has paid its outstanding bills or fines and disposed of any physical assets, the law provides 3 methods of disposing of any remaining funds. Return funds to contributors in an amount not exceeding their contributions, transfer funds to another political committee, or donate funds to a charitable organization of the committee's choice. Please remember that this section can be amended at a later date, so you are not locked into the choice listed when the D1 is first filled out. Additionally, a committee which is owed money by another political committee must first forgive the debt and show that forgiven debt as a contribution to the debtor committee before finalizing. Final step verification. Once all sections of the Statement of Organization have been completed, the D1 form must be signed by the treasurer or candidate of the political committee and filed with the board within 10 business days of the creation date of the committee. If the committee is formed within 30 days before an election, the Statement of Organization must be filed within 2 business days. Ballot initiative committees have an additional verification that must be signed by the chair of the committee. This verification states that the committee has been formed to support or oppose a public policy question. All contributions or expenditures will be used for the purpose described in the Statement of Organization, and the committee may accept unlimited contributions from any source provided it does not make any contributions or expenditures on behalf of a candidate. Independent expenditure committees also have an additional verification that must be signed by the chair of the committee. This verification states that the committee has been formed for the exclusive purpose of making independent expenditures. All contributions and expenditures of the committee will be used for the purpose described on the Statement of Organization, and that the committee may accept unlimited contributions from any source, provided that the committee does not make any contributions to any candidate political committee, political party committee, or political action committee, and failure to abide by these requirements is a violation of the Disclosure Act. Once a Statement of Organization has been filed, a political committee must file all required reports, regardless of whether the candidate is on the ballot or whether the committee has actually exceeded the $5,000 threshold, until it files a final report. Failure to do so will result in fines and potentially even ballot forfeiture. Once a Statement of Organization has been filed, the political committee will be required to complete reports disclosing contributions, expenditures, and any outstanding debts of the committee. All transactions for the committee that have an aggregate, cumulative, value in excess of $150 must be itemized on various schedules as part of committee reports. The reports will disclose the financial activity of a committee during a specific reporting period as outlined in law. A calendar that provides the reporting periods for all filings is available from the board. What type of reports are required? D2, Report of Campaign Contributions and Expenditures, is the official form used by committees to disclose receipts, expenditures, debts, fund balances, and investments in any given reporting period. The main report filed is the quarterly report using the D2 form, which is due every 3 months. Final reports may be filed at any time. It must indicate an ending balance of 0, but may carry debts when finalizing. A final disposition of committee assets and the liquidation of any investments must also be disclosed. A final report should cover a reporting period beginning on the starting date of the most recent unfiled quarterly report or the committee's date of creation, whichever is later. Amended reports may be filed to correct any errors on a disclosure report. Some errors may not require the filing of a complete amended report, but may be resolved instead through written correspondence. It is recommended that officers of a committee contact our staff with any questions about amending reports. A1 reports must be filed anytime a committee receives a contribution of $1,000 or more from a single source. This applies to committees of all types, regardless of whether the committee is participating in a particular election. The A1 requirement applies to all types of contributions, including loans, personal money, and in-kind contributions. It includes any contributions from a candidate to their own committee. B1 reports must be filed if a political committee makes independent expenditures totaling $1,000 or more. This filing is due within 5 business days after making the independent expenditure, except that if the independent expenditure is made within the 60-day period before the election, the B1 is due within 2 business days. Where will I file my reports? All Illinois political committees, regardless of designation, file their disclosure reports with the State Board of Elections. There are no disclosure filings with county clerks. Reports can be filed with the board offices in Springfield or Chicago. All reports required by law must be in possession of the State Board of Elections on or before the due date. However, a quarterly report received late will be considered on time if it is postmarked at least 72 hours prior to the filing date. If a report is sent by an overnight delivery service, it should be sent to the State Board of Elections at 2329 South MacArthur Boulevard, Springfield, Illinois 62704. A D1 Statement of Organization may be emailed or faxed. A Schedule A1 may be faxed until the committee is required to file its reports electronically. Failure to file reports in a timely fashion can result in the board assessing a fine. Itemized versus non-itemized. Under normal circumstances, a committee will need to disclose the details of each receipt and expenditure on the appropriate schedule form within the quarterly report. However, if the entity giving or receiving the money does not reach an aggregate of $150 during a single reporting period, it may be reported as non-itemized. This sum is then given on a single lump sum line for each transaction type and then added into the totals for the quarter. Date of receipt. It is very important to accurately list the date a contribution was received. For a cash contribution, the date of receipt is the date the money is deposited into a financial institution. If the cash is not deposited, the date of a receipt is the date the cash was given to an authorized member of the committee. In the case of a contribution made by check or money order, the date of receipt is the date the money is either deposited or the check is cashed and the money becomes available to the committee. If the committee receives contributions through credit cards or some other entity used for processing monetary contributions, the date of receipt is the date the committee receives notifications that the contribution was deposited. When dealing with in-kind contributions where the committee does not actually obtain possession of the goods or services, the date of receipt is the date that the recipient committee receives notification of the in-kind contribution from the contributor. Quarterly report / final report. Type of report. Check the appropriate box indicating the type of report the political committee is filing. Quarterly report. Also circle which quarter. Final or amendment of one of the previous reports. If the report is an amendment, you will also need to fill out an additional form to describe the information being amended. Name and address. These forms may be pre-printed or you may manually write in the name and address here, but print clearly and use black ink. Verify the information, and if it is not accurate, simply place a mark in the square Address Change and make appropriate changes. This alleviates the need to submit a D1 form in the event of an address change. Reporting period. Each report of campaign contributions and expenditures filed by a political committee will disclose the financial transactions for a specific reporting period. Each report filed must have both a beginning and ending date. For most reports, these dates will coincide with the quarter, i.e. January 1st through March 31st. The exceptions to this are on the first report filed by a committee and the final report. On the first report filed by a committee, mark the beginning date as the date of creation. This date should match the creation date that was reported on the D1 form, which is the Statement of Organization. Therefore, if a committee crosses the $5,000 threshold on the 14th of February, their first quarter report will cover all transactions between February 14th and March 31st. The final report is handled in much the same way. If a committee is finalized on the 23rd of May, their report will cover all transactions between April 1st and May 23rd. Cash available at the beginning of the reporting period. Committees must report their available cash at the start of each reporting period. Remember that in the case of a quarterly report, the cash available at the beginning of the reporting period should be identical to the funds available at the close of the reporting period from the previous quarterly report. Receipts. Section A of the Form D2, Part 1 through 4 is used to disclose all income received by political committees through monetary transactions. Funds received by a committee are reported in 4 categories: individual contributions, transfers in, loans received, and other receipts. If filing on paper, it is generally recommended to complete each required schedule form before filling in the totals on the D2. Individual contributions are donations made by friends, family members, corporations, labor unions, associations, and other people or organizations. This will include money collected at fundraising events. Any donations received by the committee that exceeds $150 in any aggregated amount from a single source must be itemized on a Schedule A. Transfers in include any monetary donations received from another political committee. Loans and in-kind donations from political committees are listed in their own separate section. As with individual contributions, transfers in are separated by itemized and non-itemized. The only difference in filling out the Schedule A is that no requirement exists for reporting employer and occupation. Loans received. All funds received by the political committee with an obligation or expectation of repayment. Loans can be made to the committee from sources such as the personal funds of a candidate, friends, family, or another political committee, or a lending institution. Any loans received by the committee that exceeds $150 in an aggregate amount during a reporting period must be itemized on a Schedule A. Important: when disclosing loans on a Schedule A, any endorser of such funds must be included. Other receipts are funds coming into the committee account that do not fall into the above categories. What does a political committee do with the interest accrued on a savings account? How does the committee report interest paid on a certificate of deposit? Dividends on stocks or mutual funds? How does the committee report return deposits on telecommunication equipment? Security deposit on rent? The liquidation of investments? The disposition of assets on a final report? Or simply a voided check? These are all reported in Part 4 of the D2. All other receipts that do not exceed $150 non-itemized during a reporting period are totaled and reported on the Form D2 line 4B. If interest is earned on invested campaign funds, the committee must also file an Internal Revenue Service report and an Illinois Department Revenue report. Total receipts are simply the total of all cash transactions the committee has made during the reporting period. An addition of Parts 1 through 4 should reflect total receipts deposited by the committee in its accounts. By matching deposit slips to the reporting period of the D2, the committee should be able to verify the totals indicated on the D2. If a discrepancy exists, do not hesitate to contact the board staff for assistance. In-kind contributions, including anything of value other than cash, donated to the political committee. Generally speaking, it will be goods or services provided to the committee free of charge, such as a friend who provides campaign printing at no charge or a real estate agent who provides a campaign office space rent-free. If a vendor sells anything of value to the committee at a charge less than the actual cost, the difference would be considered an in-kind contribution. An exception is made for food and beverages as long as the price given to the committee is not less than what was paid by the vendor. Any in-kind contributions received by the committee that exceeds $150 in an aggregate amount during the reporting period must be itemized on a Schedule 1. Expenditures. Section B of the Form D2, Parts 6 through 9 is used to disclose all disbursements made by the political committee. Funds expended are reported in 4 categories: transfers out, loans made, expenditures, and independent expenditures. Be aware that there are specific types of expenditures that are prohibited. In general, the prohibitions regarding campaign funds state that those funds may not be expended. Office holders, candidates, and committees are allowed to spend campaign funds to offset the customary and reasonable expenses of an office holder carrying out their governmental duties or performing public service functions. Transfers out. Any money given directly from one committee to another political committee is a transfer out. A loan made to another political committee is reported as such in Part 7, Loans Made, not as a transfer out. Any transfers made out by the committee that exceed $150 in an aggregated amount during the reporting period must be reported, itemized, on a Schedule B. The Schedule B requires the name and mailing address of each recipient of committee funds, purpose, beneficiary, date, and amount of each transfer out. All transfers out made by the committee that do not exceed $150 non-itemized during a reporting period are totalized and reported on the D2 line 6B. Expenditures make up all other disbursements of the committee and are reported in Part 8, with the special exception of independent expenditures. Any expenditure made by the political committee in excess of $150 is an aggregate amount during the reporting period and must be reported itemized on a Schedule B. Independent expenditures are expenditures made to expressly advocate for or against the nomination or election of a clearly identified public official or candidate, or question of public policy to be submitted to the voters, provided that the spending is not made in coordination in any way with the candidate or their committee. If a committee makes an independent expenditure in excess of $150 in an aggregate amount during the reporting period, they are reported, itemized, on a Schedule B9. If a natural person makes independent expenditures totaling $3,000 or more during a 12-month period, that person must file a special written disclosure with the State Board of Elections. Debts and obligations. Section C of the D2 form is used to report any outstanding debts of the political committee, including previously reported unpaid debts. Any outstanding debt incurred by the committee that exceeds $150 in any aggregate amount must be reported itemized on a Schedule C. The Schedule C requires the name and mailing address of each entity owed funds, the date and amount of the original debt, payments to be made, and the remaining balance, if any. Any outstanding debts owed by the committee that do not exceed $150 non-itemized are totaled and reported on the D2 line 10B. A total of all outstanding debts of the committee can now be calculated. Cash balance. Add cash available at the beginning of the reporting period to total cash receipts deposited during the reporting period, total receipts, minus expenditures made during the reporting period, total expenditures, and the remaining cash balance should be the amount reflected on the check register, ledger, or whatever means the treasurer uses to track receipts and expenditures. If the political committee has invested any funds and has completed an investment schedule, that figure should be listed on line F of the D2. This would determine the net worth of the committee. If the committee has no investments, that line should be left blank. Verification. All campaign disclosure reports must be signed and dated by the treasurer or candidate. The State Board of Election rules and regulations do allow for alternative signatures with prior authorization. Helpful information. Record keeping. The free electronic filing system provided by the State Board of Election includes a complete, easy-to-use record-keeping system. We recommend that all committees consider using this system and file their reports electronically, even if they are not required by law to do so. For committees that choose not to use electronic filing, we recommend setting up a record-keeping system to assist a treasurer in fulfilling their duties. at will, maintain all information required by the law. It is important that an efficient and accurate system of record keeping is created early in the campaign. The task of completing records and reports accurately is made easier by sound record keeping. Raffles. Illinois law allows political committees to conduct raffles if they have obtained a raffle license from the State Board of Elections and have no outstanding fines or outstanding overdue reports. Applications for raffle licenses are available from the board and may be submitted in person, by mail, fax, or email. Conducting a raffle imposes an additional report requirement on a committee. For each raffle held, a separate standalone raffle report must be filed, documenting the gross receipts, expenses, including winners, and net proceeds for the raffle. This report must be filed with the committee's next required quarterly report. Public information. All campaign disclosure reports are public information. Reports filed with the State Board of Elections may be viewed during regular office hours or on the SBE website. Paper reports filed with the board are scanned and also made available for viewing on our website. Information contained on official reports cannot be altered or falsified in any way, nor can it be sold or utilized for purposes of contributor lists or business solicitation. Complaint process. The Illinois Campaign Disclosure Act provides hearing procedures for complaints filed alleging violations of the law. Any person that possesses substantiated information that a violation has occurred may file a complaint using Form D-4. All complaint forms are filed with the Illinois State Board of Elections. Raffles. Federal campaign disclosure law prohibits donations from the following sources in connection with the federal or non-federal elections. National banks, PACs established by national banks, are an exception. National chartered corporations, i.e. corporations organized by authorities of any law of Congress. Foreign nationals, individual granted permanent residence in the United States, are an exception. The Fair Campaign Practices Act. A candidate or committee may choose to abide by provisions of campaigning outlined by the Fair Campaign Practices Act. This is a voluntary statement made and filed prior to an election vowing that the person making the statement will conduct a positive rather than a negative campaign. Statewide candidates file this statement with the State Board of Elections. Local candidates file this statement with the local county clerk's office. Agency review. The staff of Campaign Disclosure Division reviews all filed reports to ensure that political committees are in apparent compliance with the law. The review process is applied equally to all committees. It may be necessary for a member of our staff to contact a committee when a discrepancy exists. Do not be alarmed, as one of our staff members will offer assistance to ensure you are in compliance with the Act. Audits. In some cases, the board can require a political committee to conduct an audit of its financial records. This can be done as a result of discrepancies in the committee's disclosure reports or if there has been a repeated pattern of inaccurate reporting. Such an audit requires a committee to hire a professional auditor to review its records for compliance with a reporting requirement and contribution limits. Additionally, each year the board randomly selects up to 3% of registered political committees to undergo audits. Penalties. A person who has not paid a civil penalty faces a ballot forfeiture and therefore may not appear upon any ballot for any office in any election while the penalty is unpaid. Civil penalties will be assessed for any late filing of a statement of organization or campaign disclosure report. For a committee's first violation, the fine will be stayed, will not need to be paid, unless the committee subsequently files another late report within a 2-year period. Upon the second violation, the committee will be required to pay a civil penalty assessed for both violations. Late filing of a quarterly report may result in a civil penalty of up to $5,000. Late filing of a Schedule A1 report of contributions of $1,000 or more is also a violation for which a civil penalty may be assessed. Each contribution is considered a separate violation when determining the penalty, which can range from 10% to 150% of the contributions.